Good morning. This is Jeffrey Cohen. Good morning. This is Jeffrey Cohen, and I'm here on January 5th. Ask Me Anything. And we're here to talk about Chicago Quantum. We're here to talk about our analysis with the stock market, and just going to talk a little bit about stuff that's on my mind. I'm Jeffrey Cohen. I started the company. It's been about 2 years, and we have revenue, which is great, and revenue that is directly related to our quantum work and our stock picking. So we have products that we offer through our website and services, and so people can choose to have us analyze stocks for them. And it's a lot of fun, actually. It's a lot of work on our part. The code takes a long time to run, but it's great, and learning a ton. So I'm going to share with you a little bit about what we've been learning, what we've been working on, and ask me anything. And so I am going to put the, well, I'm sure this is bad form, but I'm going to put my video screen up so that I can see if anyone asks a question. And go ahead, questions are welcome. So first thing I'm going to talk about is Twitter. What's going on with Twitter? There's a thing called TweetDeck. And so you can see all the different folks out there that are talking about specific stocks. And so this is different. I set up my Twitter feed to be all quantum at first. I probably had 500, 1,000 people, 2,000 people I followed with quantum. And then very quickly I started looking at things about stocks. And now I follow tweeting services for stocks. And so, as an example, last night, I found 20 companies that were all trading between a penny and $1, and one was $3, that they say are going to go up. And so it's just very interesting, right? And so you have people saying, oh, added more stocks. I put my full faith in this one stock. There was one last night at like midnight where someone asked, hey, what are the hot penny stocks? And I got like 20 different ideas. And some of these are pump and dumps for sure. So maybe the first question is, what's a pump and dump? What's going on with the market? Why do I care, right? And so why I care is there are stocks that, let's say, trade for a quarter, $1, all day. All day, every day, they're $1, right? And so you look at them, and they're pretty flat, no real news, nothing going on, and all of a sudden it jumps to $2. And you ask yourself, well, wow, if I would have gotten in, I'd have doubled my money in a minute, in a day, right, at the opening gap. And there's a whole ecosystem now talking about stocks. And in fact, one of the things I'll show you, the Chicago Board of Options Exchange has a book viewer. Now let's just pick a stock, AMark. AMark Precious Metals Inc. They mint gold and silver. They actually make the products that you and I might buy that are made out of gold and silver. So if I look, this is actually really important that you understand this. I tweeted this. I got a couple likes on it. So this is the top of the book. This is a free service by the Chicago Board of Option Exchange. There's another one of these services by IEX, and I use these when I'm trying to buy or sell a stock. So if I look at AMark, so IEX is a new exchange, right? So if I look here, I see, okay, there have been some trades, 100 shares each, not a lot. $26.91, $27, $27.33 is the ask. So somebody is willing to sell 100 shares on the IEX for $27.33 of AMark. Okay. Well, what's it trading at now? Let's take a look. And by the way, this is the problem with buying and selling anything at the speed of a mouse click. You are definitely slower than the high frequency traders and the programmatic traders. So we're at 2703. Okay, so let's take a look. I go back to the book, IEX book, top of the book, right? So what that's saying is these are the most recent. So the bid is 26.76. So I'm willing to buy at 26.76. I'm willing to sell at 27.07. A-mark's at 27.03. That's right in the ballpark. Okay, I got it. Let's get rid of this. I don't need to see this right now. So now let's look at the Chicago Board of Options Exchange. So they have 4 books. So the first book at EDGA Equities, the top of the book here, right? The bid is 26.36. The ask is 27.48. It's a huge spread. That's a 80 to 92 cent, 88 cent spread. It's an enormous spread. So that ain't gonna happen. There's no volume on this exchange today. Let's look at EDGX. This is the one that I normally trade on. They've moved 321 shares, which is kind of unbelievable how small that is. But here the spread is 26.69 and 27.56. Still a very large spread. During the trading day, when things are moving, this spread can be a penny. It could be $1, $2, right? So here it's still a pretty big spread, but I see some trades here, 27.05. And I looked just 2 minutes ago, 27.09. So I'm at 27.03. I've had an execution, but it's 16 shares, so it's not a lot of shares. 195 shares, 5 shares. By the way, the price moved from 27.05 to 26.98 to 26.91 on the basis of 10 shares traded. The stock price, let's call it $25, $26. We're talking about $260 move the market. Move the market 14 cents. I got to tell you, that's crazy. I don't understand, right? Maybe this didn't move the market, but this one, 400 shares traded on this particular exchange. This is BYX. So 26.63, 27.15. Oh, it went up. 26.64, 27.15. But A-mark traded lower. 26.91. So I take a look at the stock over time, right? This is over, let's do it over a year. Stretch it out over a year, right? So I don't even know what A-mark is at this point. I'm just looking at the stock, right? And so I see that it's run up. It was trading at like $8, $9 a share. Ran up. Oh, bad day. Ran up, gapped up. It's nice. $33. $36. And now it had a nice solid foundation at around 30. Now it's trading at 25, and now it's coming up. So now let's take a look at what's happening today. Not today. No fire today. Yes, today. We'll candle it. I like candlelight. Like if I have a nice dinner, I want candles. Candle, the way you read this is, it's red. So I started up at the top of the candle and I ended at the bottom. So it's a 5-cent move. This one, I started at the bottom, got out at the top. So open, close, open, close. And I take a look, and it's traded 27.09, and now it's down to 26.91. So a lot of times I'll have the daily minute-by-minute execution here. It's kind of nice to see it. So what's going on with A-mark? So I can't really tell yet. All I know is not a lot of shares traded on this exchange. 321, 0, 398, 235. I got 3 shares traded. 3 shares. $75, $100. Come on. You're killing me here. But it traded at 27.21. So somebody is willing to pay that extra 50 cents to see that stock ticker flash 27.21. I'm not a conspiracy theorist, but I will say that that is highly suspicious. What's going on? 3 shares? 10 shares? Come on, who's moving this market? I want to see 10,000 shares trade. Not 5. Oh, look, 16 shares traded. Right? Crazy. So go over to my TweetDeck, and I have a little search there. By the way, I love TweetDeck. Use it if you don't use it yet. Let's take a look at A-mark. So do a quick search, because I'm curious, right? Maybe something happened with A-mark. Swing Trade Bot says it rose above previous day's high today. So it was yesterday. I see something here, another robot. It went up yesterday. Oh, and then Sirius Poe, we're into Sirius Black, A-Mark once again above $26. Well, it's now $27. Bullish flow. So I'm seeing some nice things on Twitter. Not a lot, though. Right? Not a lot. But I'm seeing stuff. I like it. EPS growth quarter over quarter. So creating a little buzz. I mean, I could tweet something as well. I could say, this is very exciting stuff. I'm all excited about A-Mark, right? What's going on with A-Mark? And it's just interesting, right? But I'm not going to pump it because Chicago Quantum Net Score actually picked a stock. So we're going to keep a little quiet, a little under the radar, right? This is just an instructional video, but just interesting. It's at 26.91. So that's how we understand the book. So there's actually another book that I probably need to buy. NASDAQ Book Viewer. This one costs money though. So I might do it. Because NASDAQ trades a lot more shares than IEX, of course, and even CBOE. So I could be looking at 3 books during the day. I'm looking minute to minute at the stock. I'm looking at the tweet deck. I'm trying to see what's going on with A-Mark. Not a lot of chit-chat, which is interesting. Last thing I would look at with A-Mark, and this is important, is these stocks trade a lot on news, right? Well, I'll show you why I have the shares listed down there, but that's not what's important right now. I think I'm making a few bucks today, which is nice. A-Mark profile. It's always good to know what your stock does, right? 215 employees. In fact, I just bought a company, precious metals trading company, right? Wholesale trading, ancillary services, secured lending, and direct sales. They sell them in terms of bars, plates, powders, wafers, grains, ingots, and coins. So, interestingly enough, they had their dividend date November 30, and they had their quarterly report. And so I like Google because now I'm in Yahoo Finance, financials. Let's take a look at the quarterlies on this company. Are they making money? Do they generate cash flow? It's always nice. So I look in the last quarter, which ended in June, so it's a little bit of time back, right? They generated $48 million of cash flow from operation. They generated $48 million, $49 million in cash flow from investing. They lost or paid out $53 million in financing. So what did they do? Net issuance or payments of debt. So they paid back $32 million of debt. And they had other financing charges of $20 million. They probably restructured something. So we're going to take a look at that. We're going to take a look at that, right? So it looks like they, this is sweet. It doesn't say that they issued or repaid debt here. So we're going to have to take another look and find out what's going on. So we look at the balance sheet. So first off, made money. Made money from investing. I love that. And they appear to have paid back some debt. So let's take a look. So I go year to year, net debt is down $75 million. Net debt. Now, total debt is only down $27 million. But truthfully, it makes me sick when I see these companies levering up on debt. So I like to see that the debt's coming down. When I look at assets and liabilities, one of the things I also like to look at is current assets at 714, current liabilities at 556. So it's more than a 1 ratio. So my current assets are more than enough to cover my current liabilities. They stay in business. That's terrific, right? I didn't even look if they made money or not because I don't really care. I care about cash and I care about leverage. We take a look. They got $5.8 billion in revenue. This is not a small company. And they made about $100 million bucks. Gross. Cost about $39 to make it. They made some money. They got to pay some income tax. It's okay. They made money. I love this. I got a company made money, made cash. They're not on the bankruptcy train. Love it. So that's A-Mark. So we're going to take a look now and see why did it go up? Is there any news? There's no news. In fact, I'm looking today here now, and it's probably down again. But my other guess is if I look at the book, the IEX book, I should be seeing a lot of shares trading. It's not 100 shares again. 2707, 2676, 2696, 2660. So I see my spread. Oh, look, 2 shares traded. Who's trading 2 shares? I don't understand. I mean, I know there's traders out there that make money, right? They're making like $1 or $2, $3. That's fine. I love it. By the way, it's better than working at Walmart, right? So let's look at the book. Let's look at the CBOE book. And I'm at 2650, 2696. It's tightening a little. 2651, 2707, 2627, 2731. That's a little daunting. That's almost $1 spread. And then 2469, 20. Come on, that's a $4 spread. That's crazy. So I'm trading at 2709, 2669. So the thing dropped 40 cents, and I traded 9 shares. I traded 88 shares, 10 shares, 100 shares. So not much volume. Let's see what the volume is on the day. It could be that this particular exchange didn't trade a lot. By the way, my broker has up to the second accurate stuff, but this is good enough. So I've moved 11,000 shares. Again, not a lot of shares. Thinly traded. So I'm looking at the stock and I'm trying to figure out what do I do with it, right? There's got to be something, some information here. So let's take a look at who's holding the stock. So institutions are holding 43%. Insiders are holding 34%. It's kind of interesting. And who's holding it? Dimensional Fund, Vanguard, BlackRock, Renaissance, Bridgeway, Wedbush, Hillside, Northern Trust. There's a safe name. Geode and State Street, right? They hold it in their total stock market index fund because it's big enough to be in total index. So that's the 78% held by people that don't trade every minute, right? That's pretty interesting. And so what is it about the stock? Why is this stock interesting? And so that's fine. That's how I look, right? And if I look at TweetDeck, let's see, because it fell, maybe there's another tweet out there about it. By the way, you could spend all day doing this. This is crazy. You know, you hope you have time to actually run some code, write some code. So that's what's going on with A-Mark. That's the top of the book. I wanted to show you. We could look at Finviz. That's also interesting. They have another sense with A-Mark. They can chart it for you, right? So you look. It was recently at 2709. They're not so up to date, right? We're at 2660 now. We're actually down 7 cents on the day. But you can see how it climbed. You can see your bands. Right, they're trying to draw a line here, show you that there's a moving kind of channel that they're moving in. What's interesting here is they're saying institutional zone 28%, insider zone 3%. So they're giving you a very different picture of the company. Return on assets of 6.4%, return on equity of 58%. Right? Gross margin of 1.6%. So it's interesting, different information, right? And average volume, right? I believe it's 69,000 shares. What I like is the bounce here, but I don't know what this means, right? It's been a huge fall. So let's keep going. Where was I? So we were talking about this. Let's talk about what we accomplished. It's interesting. Chicago Quantum. And I realized that our model can be used for swing trading and for delivering alpha. So what is this thing? First off, who are we? Lately, I've been feeling like it's me and two guys, which I think it is. It's a couple of guys. We're all out there. We're an experienced and senior team. We're coding, and we're staying engaged with the quantum ecosystem. We're an applicant, founding member to the Quantum Economic Development Consortium. Our name was on a letter to President-elect Biden, asking him nicely to support quantum, because we think it's important for America and our allies. So we're engaged. We fight for good, by the way, just in case anyone's out there wondering. We're on the good side. We're the white hat guys for quantum. So we unexpectedly created a quantum algorithm. So what happened was we applied for an NSF grant. We were very excited. We thought we could beat the stock market, right, with a quantum algorithm. And then 8 months later, we did. Oops. Don't tell anyone. But we came up with the algorithm. We've been running it. It makes money. So that's kind of cool. So what's the first thing you do? Well, you offer to sell it to everybody, right? You can use our algorithm and our platform. You send us the stocks. So we just had a customer on Sunday send me 64 stocks. They also send like 10 backup stocks because some of them don't pass data validation. We analyze them classically and with a quantum computer. We provide both the quantum results and the classical results. By the way, the classical results use the quantum results as well. So there's a virtuous cycle here. You get the quantum pick, the classical pick, and the classical pick use the quantum pick. And you receive 2 personalized stock portfolios. In fact, some of our clients can get 6 or 7. Right? You just ask in the email. You let me know what you're looking for. Or you hire the team. You can hire me for the week. We're not cheap, but we'll help you build out your algorithm. We'll help you run it on a quantum computer. You own the IP. So what most people do, we've not had anyone say, just for $50, run it for me. But for $150, we can run it. We can run a good analysis. This is our most popular purchase. And we can run up to 3,250 stocks, quantum and classically. By the way, we're going to be updating that because now we can run, just last night, here's my book here. We ran more than that. This was for our own account. By the way, we picked a bunch of stocks, but we haven't invested in them yet. We'll let your day run a little bit. We're going to talk to you guys. 3,569 stocks. So that's more than 3,200. By the way, we've introduced another thing, which is you can then pick dividend only. Has a stock paid a dividend in the measurement period of a year? And so we applied that test last night. And, 1,756 stocks picked a dividend. 252 days of trading data. We had to pull one more bad stock out because it had a negative beta. And then we ran it through. And at the end, we came up with some pretty darn interesting stock picks. And so I'm not going to show you those stock picks, but I could. In fact, maybe I will. Maybe I'll give you a little taste. Why not? If you're good enough to watch the video, you can get some free stock picks from last night. Close of business. Close of markets. We can also just have a conversation like I'm doing right now. We'll walk you through methods, the algorithm, the results, and then again, $7,500 to pick. So the big changes are we're up to about 4,000 stocks since we introduced another NASDAQ exchange. And we don't do over-the-counter. The reason we don't do over-the-counter is that my broker won't even let me trade over-the-counter, right? Unless you're a professional investor, you should not be trading over-the-counter. Now, it's my opinion, but these stocks are thinly traded. The markets are they're opaque. It's hard to understand. Pricing visibility, you don't know who's on the other side of the trade. Lack of trust. And so what I say is if your stock is listed on a New York Stock Exchange, either American or NYSE, or you're on NASDAQ global market select or global market, you're in great shape. In great shape. There's liquidity. There's an exchange that's doing compliance checking, standing behind you. So we run that. So dividend check, and we added an exchange, and we get great results. And so, but something happened yesterday. That's part of what I want to talk about. So let me pull it up, and I want to ask you guys a question. Tennessee Valley Authority, PARS, permutable. What's the name of this? Name of this thing? Permutable. Oh, come on, I wrote it down. There it is. Puttable automatic rate reset securities, PARS. It's a $25 bond. It's a $25 bond. It's like a savings bond, but it's for the Tennessee Valley Authority. So it does good. It brings electricity to the poor rural areas that are served by the TVA. So it's a $25 bond. It pays either, I think this one's at 2.216% interest. There's another one, TVE. We learned this the hard way. TVE pays, was it 2.134? It might be the other way around, but it's basically 2.2% interest rate and $25 bond. So I didn't know that New York Stock Exchange listed retail bonds as common stocks. It's killing me, but they do. What happened yesterday was we ran picking dividend stocks. Up comes TVC. We had to pull it out and rerun. It's very frustrating. Very frustrating. So be careful, right? Not all New York Stock Exchange stocks or equities are really equities. Some are bonds. And so we do that validation before we send the results to our client. And I think that's important. And now we know for next time, check if there's any bonds in there. So, so that was interesting. So what else? Dividends, adding exchanges. Oh, particle swarm optimization. We did something pretty cool. I love this. So first off, I mean, I code, but am I really like a data scientist? I don't know. Am I really a quantum expert? I don't know. But I sure love the physics of this, and I sure love the energy flow, and I like it. I like this a lot. So what is a particle swarm? A particle swarm has each of these are a particle. And we normally set it up with 100, right? So 100 particles. The whole entity is the group of particles. And you see how it starts all spread out. And what happens is the group has momentum and it pulls all the particles towards the center of mass of the group. But each particle also looks for a great outcome. And so we do this with our system, and in many cases can find the best stock portfolio in about a minute using particle swarm optimization. So this is not just like genetic algorithm. It's not just like simulated annealer. It's definitely not like Monte Carlo. It's definitely not like a quantum computer. It has nothing to do with simulated bifurcation. But what's nice for us is when this picks a portfolio, like it did last night, and the other models pick portfolios that are very similar in nature, it gives us a good feeling that that energy value, the Chicago Quantum Net Score, is close. So we now use particle swarm optimization in our model. So I'm not going to answer that, but I am going to take a look at who it is. Well, it's Kenny Young. You can call back, sure. We get about 90% spam. And so we now have effective particle swarm optimization in our model. It's one of our solvers. So let's see, looking at the chat line. Hello, everyone. Hello again. Anyone out there? Questions? All right. So what else are we going to talk about? Let's give you some stock picks, right? So what I ran last night, I ran the model and it picked 4 stocks. So let's take a look. Let's blow these things up. Weirdest stocks ever. Weirdest combination. DR Horton. See if these things are even up today. Nah, still down. I try to like this stock, but it doesn't matter. It's residential construction. Okay? Wish I had a way to mark on a board here for you guys. Maybe I do. I'll do a text editor. Let's show you how to do some stuff here, right? New document. DHI. Oh, that's great, Jeff. We can read that for sure. I'm all over it. Alright. So pick number 1. And this is as of January 4, 2021. Market close. So this was run overnight. Market close data run overnight. This was dividends paid in the measurement period, which was 252 prior trading days. Positive beta and adjusted close prices greater than 0 and continuously traded for the 252 trading days. So that's our validation. It's good to know that. Oh, they're also on exchanges. NYSE, NASDAQ, which is Q, which is a trademark, service mark, trademark, service mark. NASDAQ Global Markets, which I think is G. I think it's G. By the way, also a service mark of the NASDAQ Corporation. And then New York Stock Exchange American. So we like them to be on those exchanges because it gives us a little more validity. What else do we do to validate? Oh. No income funds, no preferreds, no bonds, we hope. Common stocks, no foreign stocks. That's good. I shouldn't really say it that way. It's good enough. All right. So, stock pick 1 is DR Horton. DR Horton, which is ticker symbol DHI. All right. So that's interesting because that's a bet on Main Street. It's a bet on the overall economy. Oh, and by the way, one last thing. We are not brokers. We are not investment advisors. We are not registered with FINRA. This is not investment advice. Please do your own due diligence and research before investing. Investments in equities can and do lose money. Please be careful. And only invest what you can afford to lose. This is very important, by the way, because the last investments that I made were down. So the first 2 weeks, they were not up. It was very frustrating for me. So I held on, and now we're doing a little better. But please be careful. So going back, that was my public service announcement. Oh, I hope you guys all appreciate that. So stock pick number 1, D.R. Horton. Who's number 2? Kelly Services. God, I love that company. Oh, and the other thing is, what are we doing here? These stocks are part of a portfolio, a buy and hold portfolio. That has the lowest Chicago Quantum net score. So you can read our research. I'm sorry, I realize I better be somewhat serious if I'm going to talk to you guys. So you can read our research here. Research. I accept. Now it's got my cookies. I got podcasts, I got ResearchGate, right? So if you click on ResearchGate, you're going to get access to all the info. I haven't even talked about the Bears yet. We'll get to that later. So please take a look. Please take a look. And if you go to ResearchGate, you'll see we have a lab, Chicago Quantum Lab. Oh, look, 15 things going on. And in our research lab, picking efficient portfolios, 989 reads. It's actually a lot of reads. And 3 recommendations. We got our 60 stocks, which is 1,000 reads. And we got our 40 stock paper. 3 citations. That's pretty cool. When other people cite your work and their research, loving that. Let's take a look at our original work. Here's where we explain in excruciating details about our work. We just published a whole paper, right? Why not? Why not? Let you take a look at it, right? And if you're going to put money in the stock market, you better know, right? Research interest. That's cool. People are really looking at it. That's nice. It's actually getting read as much now. It's a lot, actually. Okay. Someone's been looking at our research. I don't know, man. I hope you guys do your due diligence. All right. So let's see. What about Kelly? Kelly. First off, let's take a look. Stocks make money today? So these are the stocks that were picked by the Chicago Quantum Net Score recently, plus 1 flyer of my own. I've been taking a flyer on a Mexican gold mine. But you take a look, Cosmos Energy was just picked. Oh, it's up 12% today. Oh, it's a good thing I invested 2 days ago, baby. Love that. 12%, 1 day. Okay, 11%. It's good enough. Right? Forum Energy Technologies been a long call for this model. It's up 8% today. This is no guarantee, right? PDC Energy up almost 5%. SMLP, bit of a slow mover, up less than 1%. But we do have some drops here. Sundance Energy, I really struggle with this stock. It's down a half a point, 0.5%. Tandem Diabetes Care, we're helping people in the nursing homes. Down 0.1%. But looks like we're going to get to go out to dinner tonight. No, not go out, but order in or something, right? Because we're going to make some money today. God, it's up 11%. Cosmos Energy. I love Cosmos Energy. Just picked it like a few days ago from the model. The model is amazing. Love the model. But what's important is you see something like A-Mark, and it shows you that you just kind of got to watch because you watched a book. You're 2667, 2706. But again, look at this. No shares. Just tiny, tiny transactions. Please be very careful if you want to trade an A-Mark. The spread, 60 cent spread. I mean, it's going to cost you on average 30 cents to get in and out of the stock. You better be sure. I'm sure that they make money. And they make cash. And they make gold bars. Who doesn't love a gold bar, right? Not that I like, But 26.77. So it's gone up a little. 26.69. 77, 87, that's 100 shares. At least it's a round lot. Let me take a look. Let's see if the stock price is moving. 26.95. Gotta love that money. This has nothing to do with quantum, by the way. This is just loving that money. So let's take a look again. Because when the model picks the stocks, right, I don't know what it's going to pick. It picks D.H. Horton. I don't even know who D.H. Horton is. I never bought a house from them before. I don't know if they're any good. But then you start watching, minute by minute. What are we doing here, right? We're climbing. We're steady climb here, right? Steady climb, minute by minute. I love that. Love it. Now, let's take a look at the whole year, though. When we look at the whole year, you got to remember, just in the spirit of full disclosure here, the stock was an $8 stock, $9 stock that took off. Boom. Why did it take off? Maybe because the price of gold is up. Maybe because they made money. Maybe because they had an acquisition recently. There's a lot of reason why it could have gone up. But it went up, right? And so you're buying a stock that has run. The horses are tired, maybe, right? Just be careful. But I love it. It's up 1% today. Love it. Love that money. All right, so where are we at? What's the next one? I get very distracted in the markets. You can spend all day looking at these things. So don't do what I do. If you have a job, do your job. If your job is to make money in the stock market, these quantum computers, then you get to do what I do. Right? By the way, if you work for us, because we are going to be hiring, this will be your job. Hey, Jeff, what do I do today? Yeah, I want you to follow 5 stocks. I want you to run the model a couple times. I want you to give me a couple of winning portfolios. By the way, we got a couple client requests coming in. Need you to run those. By the way, important note, when a client gives us a request, we don't run that day. Good news is last night, I didn't have any client requests. But if I get a client request, they get the deal. They get the buy. We don't get the buy. I don't tell my team. Nobody knows. If we run a job for you, you get the answers. We don't run that day. That eliminates any kind of conflict. So Kelly Services, by the way, Big Beaver Road is about 40 minutes north of Detroit. It's about 15 minutes north of Southfield, past the Ford plant. I used to work up there. Well-paid individuals here. 7,700 employees. This is a pretty big company. Let's take a look at Kelly. Did they make any money? Well, they got $4.6 billion in revenue in the last 12 months. It's fallen due to COVID, of course, but they brought their cost of revenue down. So does this company make money or not? Cash flow statement, yeah. They make money. They make cash. They made cash. They made money from their investments, which is always weird. They paid back some debt. They paid a dividend. Love that. Responsible management. They ended the year with $250 million in cash. Holy cannoli, Batman. Love that. Love that. Do they even have any debt? And there's a Kelly A, by the way. This is Kelly B. Do they even have any debt? Let's see. I don't know. I never even looked. Right? Total debt, $65 million. That's not a lot. For a billion-dollar tangible market cap company, they got $65 million in debt. That's probably more like working capital at this point. What's the company worth? So remember that number, $65 million in debt. Okay, $780 million. So it's nice, like a billion-dollar market cap. It's not bad. So we got Kelly Services, number 2. So one of them, consumer cyclical. The second one, Kelly B. Come on, same Kelly B. By the way, if you're still watching, I'm going to give you all the stock picks. But first, I'm going to give you 2 public service announcements. One, Chicago Bears made the playoffs. Playoffs. I'm going to have to teach myself the shuffle, right? The Super Bowl shuffle that the Bears used to do in the 80s. I love that, right? Bears going all the way. Now, we got killed by the Packers. Let's be honest. The Packers, I think they beat us by like 20 points, 19 points. It's awful. But I'm still a Bears fan. Oh, yeah. The other thing is I love America. God bless us. And I hope you're staying safe with COVID. All right. Since we have no sponsors, I will tell you that, you know, this is just because I love the Bears, right? So this company does workforce and employment solutions. Okay. It's interesting. Okay, so who's the third company? What is Silgan Holdings? God, I'm picking the dogs. The dogs here. I never even heard of these companies. This is one. Okay, so this is a point of learning about the model. Come on now. All right, fine. I'll type it. I can't believe I'm giving you these stock picks for free. You should have paid $750. Anyone watching? You just feel free. Go to the website. I'm going to show you how to do it right now. I want you to go to your telephone. I want you to pick up that phone. And I want you to call now. And I want you to give with your full heart. No, wait. That's an evangelical speaker. Right, so we're not that. Let's take a look. Because you might have wanted these 4 stock picks before the market opened. Before anyone else knew. These 4 stocks work well together. Okay? You go to the website. You know, you should sign up for the website. Sign up for the newsletter. Subscribe. It's good. We do about once every 2-3 months. It's fine. I'll keep you in the know. You click on portfolio. You could also click on offerings. You want to analyze up to 3,250 stocks. By the way, we are going to update that. We're going to add the dividend thing. We're going to add the next exchange, but it's fine. For now, this is a very low risk, high return possibility. You say, you know what? I want to buy this. So here's what happens. We pick a 64 stock all-star portfolio. You just buy 64. Wrap it up. Walk away winner. And then we look at the most attractive portfolio from those 64 stocks. Now, last night, we did something different. We ran a 150 stock all-star portfolio, and then we ran it. Boom. But we didn't run it on a quantum computer last night. we were in a hurry. And so the truth is, almost every classical solver picked the same stock, so we didn't need it on a quantum. But that's fine. So what you can say, because this is what we did, is you could say, I want New York Stock Exchange, NASDAQ, and New York Stock Exchange. Preferred number of stocks in a portfolio. Some people like 5. Whatever. Buy now. By the way, I'll send you a t-shirt for free if you ask me. Get it, or even 2. I sent one guy 2 free t-shirts. They love it. It says creating quantum advantage. Are you ready? They're nice gilded cotton, really good supporting cotton. So you sign up and you roll with it. And what's going to happen is you're going to email me with the stocks that you want me to run, or in this case, you've already told me. Give me 5 stocks. Give me the 64 stocks. Run it on those portfolios, and go. And that's it. You're done. So this is what you need to do, right? So now let's take a look. Who is Silgan Holdings? What do they do? So Silgan Holdings, they manufacture and sell rigid consumer packaging. And they do metals, they do closures, and they do plastics. So think of it in terms of tin cans. By the way, they do consumer, but they also do some industrial, some chemical. But we don't talk about that. That's like not the most thing, right? So that's interesting. Metals, closures, plastics. They got a lot of employees, actually. 13,200 employees. This is not a small company. So what do they do? What do they do? They make any money? Jeffrey, do they make any money? Quarterly cash flow. They make money. Love that. So when you pick dividend paying stocks, in general, you get stocks that make money. Love that. I love when they make money. I make money. I want them to make money. I'm a startup. I make money. Make that money. They're investing back in their business. Okay? And financing has been interesting. They've been paying back debt, but over the past 12 months, looks like they might have taken on some debt. Yeah, in the last 12 months, they actually they issued debt. Don't know why. Oh, they issued debt, but they put it right on the books there in cash. They got $600 million in cash. They look like they're positioned for an acquisition. They issued debt. They repaid debt. So $344 million of new debt. But they had free cash flow. Did they make money? Well, let's take a look at the balance sheet. Do the first check. Current assets, $1.4 billion. Current liabilities, $1 billion. That's helpful. 1.4 ratio. Total debt, $2.25 billion. Net debt, $2 billion. That's rough. $2 billion in debt. Let's take a look. What's the market? What's the whole market cap of the company? If it's $2 billion, market cap's worth $4 billion. Okay, so it's 1/3. So the debt to equity ratio of 1/2. It's a debt makes up 1/3 of the market cap. I can live with that. I'd like to see them pay down some of that debt. And let's take a look at the income statement. Total revenue, it's like $4.5 billion in revenue. 3.8 cost of revenue. Gross profits healthy. Operating expense. So they make money. They make money. I like it. So be curious, why did they raise all that cash, right? I don't understand. But their normalized EBITDA is nice and high. $600 million. EBIT, $371. Earnings before interest, and taxes. That's good. That's good. They make money. They're making money. We love that. So there's another pretty good stock, right? Sogen. So there's a fourth one. This was a surprise for me. Woodbro. Woodbro Limited. Now what's interesting is I've never run the dividend picker with an eye towards actually dropping money into the stocks. I ran it because I had clients that said, look, I'd love to have some dividend paying stocks. It makes me feel safe to have dividends. But now that I'm looking at these with a keen eye, it really makes you wonder what's going on. This is a very interesting set of stocks to look at. So Woodbro is an Indian company. It's an Indian IT information services provider. They have 185,000 employees. Wow. Wow. Do they make money? Let's take a look. Start with the cash. Operating cash flow. Oh, it's in Indian rupees. Okay, so it's not quite the same, but still positive cash flow. Looks like they paid back some debt. Looks like they bought back some stock, which is interesting. Let's take a look at the balance sheet. Net debt. It's pretty high. I mean, 100, right? But actually not a lot compared to, look at that. Assets and liabilities. God, I love these companies. I love IT services companies. They are cash cows. Ooh, love that cash. Wave the flag. I wish I had an Indian flag. I'd wave the Indian flag because they're making cash, right? Current assets of 520 million. Current liabilities of 200 million, 216. That's like a 2.5 to 1 current ratio. Love that money. This is not that risky in general. Oh, look at that. The share count came down. That's what they did. They're buying back shares and they're paying off debt. God, I love that. Taking care of that shareholder, right? Now we take a look at the income statement. 600 billion rupees. Cost of revenue is about 2/3. They got gross profit, operating expense. So they made money. They made about 1/6 in income. Love that. So let's take a look. They got 100 billion rupees in debt. What's the company worth? 31 billion. And I believe that's dollars. Let's take a look. We're at $6 a share. How many shares? $6 a share. 5 million. No, that's interesting. If it's 6 million, that can't be that right. It can't be right. All numbers. So it's roughly 6 billion shares at $6 is $36 billion. It's a little lower. Maybe it's 30 billion, which I'm guessing is there you go. So it's 6 billion shares at about $6 a share. So it's nice. So this is the stock picks. So our January 4, 2021 stock picks from the Chicago Net Score Quantum Algorithm R. Drum roll, please. DHI, Kelly B, Sogen, and Witt. And so the idea Let's plot these out. Because we should see, I haven't done this yet. This is kind of fun. Let's see how they roll. We should see some zigging and some zagging here. We're looking at 1 year, 1 day candles. And we're going to compare it to DHI, DR Horton. They make homes. Let's make them green. Compared to Kelly B. They do services. We'll make those purple. Let's compare it to Sogan. They make packaging. Let's make them yellow. So when we look at these stocks, they kind of trended down, but first up and then down, while down. Then these guys are going up, up, flat, up, while the other ones were coming down, up, up, down, flat. This one jumped. Kelly jumped. Wow. Look at that. That's crazy. The other ones didn't jump. Dropped. The other ones didn't really drop. So there's some nice counter-cyclical moves there. So now, this one's coming up. This one's going down. This one's up and down. This one's up, down, and up. So we see a lot of movement. Now in general, right, down 9%, up 20, up 26, up 51. So if we would have held this stock portfolio a year ago, we would have made money. The question is, what's it going to do next year? That's the question. That's the question. So I'm just telling you that this is the portfolio of choice for a set of stocks that pay a dividend. So in general, going to be a little less risky. They pay a dividend, but they zig and zag. And so we would say that the effects last, can be expected to last. Around 10%. It's not around. They can be expected to last 10% to 20% of the trading days that went into the analysis. So in this case, 252 trading days. So effect should be expected to last 25 to 50 days. We have seen 35 days. Okay. So you buy it today. Now personally, I like to buy low, so I'm playing around in the market today. I'm looking to see where I can get a good buy, a good entry point. And I'm selling where I'm selling, right? So that's, you may want to do that too. But this is a very interesting model. And so I want to thank you for listening. I want to thank you for allowing me to give you the story, right? And as a result, you just got a $750 run. And if you would have asked us last night to run it, you would have had it last night around midnight, maybe 10 p.m. You would have had time to look at it this morning, make your trades, right? Think about how you're going to enter the market. No one else would have known. These are your picks. And so I love it. If I can make you money, let's do it. So just in the spirit of disclosure, I want to disclose that these are the stocks that I hold. I don't know about my colleagues in the company, but for right now, I hold all of these stocks. Everyone except for the Mexican gold mining company were picked by the model. I'd like to point out that they're all green. I didn't know that that would be the case while I'm talking to you. We've had one up 12% while we're watching, one up almost 10%. We got laggers, only up 1%, right? 0.2%. And I just want to tell you that it's nice. It's good. I hope you have as much success as we're having today, knock on wood. And have a great, great week. This is Jeffrey Cohen. Please visit our website at www.chicagoquantum.com. Right? Or you can call me. That's my cell. Or you can email. Yep. Thank you.